The crypto market is currently navigating a period of intense structural transition. While the broader narrative has been dominated by the consolidation of institutional liquidity into Bitcoin and the scaling wars of the Ethereum ecosystem, a fundamental shift has just occurred in the bedrock of the Algorand network. We're looking at ALGO. Currently, the price is hovering around 12 cents. It's important to note that we've actually moved just outside of my primary load zone, which I'll break down in the technical segment. This price action, it's a trailing indicator of the intelligence we're seeing behind the scenes. The story we are diving into today is a massive convergence of regulatory finality, institutional on-ramps, and a technical setup that has been 3 years in the making. In this video, I'm breaking down why the SEC's official classification of ALGO as a digital commodity, not a security, fundamentally changes the risk-adjusted return profile for every serious investor. We are moving past the era of regulatory uncertainty and into the era of institutional integration. We'll analyze the technical trap forming at the 21 exponential moving average and why the Heikinashi RSI is printing a bullish divergence that, in previous cycles, has preceded triple-digit expansions. The point here is not to chase green candles. It's to spot the difference between a network's true value and how much the market thinks it's worth. If you value capital preservation and are looking for data-driven entries in an asset that has been de-risked by the highest regulatory bodies, then this analysis is for you. Let's look at the hard data. To understand where we're going, we must have the objective clarity to see where we currently stand. Algorand has been in a prolonged accumulation phase. While other Layer 1s have experienced volatile speculative cycles, ALGO has been grinding through a massive macro base. Currently, the price action is testing a descending trend line, the orange dotted line on your chart, which has acted as a persistent ceiling since the local top in July 2025. Market sentiment remains largely skeptical or indifferent. From a contrarian perspective, this is the ideal environment for a sophisticated investor. The smart money doesn't buy when the narrative is at its peak. They buy when the structural shift is invisible to the casual observer. We are seeing a massive bridge being built between the technicals and the fundamentals. On the macro chart, we had the most oversold readings on the weekly time frame since 2023. Simultaneously, we have a blockchain that is solving the quantum threat long before the market even began to price it in as a risk. This analysis matters right now because we are at the apex of a multi-month wedge. A confirmed weekly candle close above 12 cents wouldn't just be a minor move. It would be the starter pistol for a macro trend shift. However, as your lead analyst, I must caution you. We have to watch for the trap. We've seen false breakouts before, and the data will tell us if this time is different. Let's get into the raw, verifiable data, because this is where the crypto yield pro edge is forged. First, we must address the regulatory breakthrough. On March 18th, the SEC officially confirmed that ALGO is a digital commodity. It's difficult to overstate the magnitude of this. For years, Algorand was unfairly lumped into the unregistered security basket, which acted as a legal poison pill for US-based institutional desks and pension funds. That poison pill has been removed. By being classified alongside Bitcoin and Ethereum as a commodity, ALGO has effectively achieved a safe haven status among altcoins. This removes the threat of enforcement actions and creates a direct pathway for spot ETF applications in the United States. Beyond the legal sphere, Algorand is winning the race for long-term survival through post-quantum cryptography, or PQC. Google recently mentioned Algorand 32 times in its white paper regarding quantum risks. This is definitely not just a casual mention. It's a recognition of Algorand's leadership in the field. Algorand is one of the first major chains to execute a post-quantum transaction on its mainnet using NIST-selected Falcon signatures. While other networks are still debating how to upgrade their encryption to survive future quantum computing threats, Algorand has already shipped the solution. The recent addition of Chris Pikert, one of the world's foremost experts in PQC, to the foundation from Algorand Technologies further solidifies this technical moat. But technical superiority is irrelevant without adoption. The data shows that the plumbing for global adoption is being installed right now. PostFinance, one of Switzerland's leading financial institutions, has opened algo trading to its 2.5 million customers. Revolut, the global neobanking giant, has integrated algo staking for its 70 million users. These are not just partnerships on paper. These are direct integrations that allow retail and institutional capital to flow into the ecosystem with zero friction. We also see Algorand positioning itself as the settlement layer for the agentic web. Through the integration of the Model Context Protocol, AI agents can now have their own native wallets on Algorand. As we move toward a future where autonomous AI agents handle microtransactions, they'll require a chain with 100% uptime and immediate finality. Algorand has processed over 3.5 billion transactions with exactly 0 seconds of downtime. Compare that to the frequent outages of its high-throughput competitors. Furthermore, we see real-world utility in the humanitarian sector. The Aid Trust portal is now using Algorand for real-time tracking of aid flows, providing an immutable ledger for non-governmental organizations and governments. This proves that the chain can handle complex, high-stakes financial operations. Even the International Monetary Fund's wish list for future digital currencies, features like atomic settlement, programmable compliance, and fractional ownership, is essentially a checklist of Algorand's native Layer 1 primitives. From a fiscal perspective, the foundation has made some hard choices. They recently reduced their workforce by 25%. While some critics view this as a sign of trouble, in the current macro environment, this is a sign of operational maturity. They are extending their runway and ensuring that the treasury is aligned with long-term sustainability rather than short-term hype. The network currently operates at a net loss of approximately $664,000 annually because transaction fees are kept low to encourage usage, and block production is subsidized. However, with 21.5 million unique token holders, the base is wide enough that once the usage gap closes, the economics of the token change drastically. Now let's pivot to the charts. The tape is the ultimate arbiter of truth. We are looking at the ALGO weekly chart, and the structure is telling a very specific story. To get a precise read on the trend, I have anchored a Fibonacci retracement from that 61-cent high in December 2024 all the way down to the recent 8-cent lows that we saw both recently and back in 2023. This tool is vital because it maps out the mathematical exhaustion points of the bears and the acceleration points for the bulls. Currently, we are looking at two key Fibonacci levels that will define the coming months. The first is the 236 level, which sits exactly at 20 cents. This is a massive psychological and technical magnet. Above that, the 382 level is waiting at 28 cents. As we look at the immediate price action, we are currently battling the 11 to 12 cent level. This is where that orange dotted descending trend line, which has suppressed price since July 2025, is currently being challenged. A weekly candle close above this trend line is our first requirement for a bullish thesis. But we must be surgical here. Look at the 21 exponential moving average, the red line on your screen. We are currently attempting to cross above it. If you look back to September 2025, we saw a nearly identical setup. The price poked its head above the 21 EMA, retail jumped in, and then it was met with a violent rejection that sent us back to the lows. We need to see a breakout, a retest as support, and a hold before we can confirm the macro trend has shifted. Now let's talk about my load zone. This is the green box on your screen, situated between 8 cents and 10 cents. My last video on March 3rd was posted while the price was still in this zone. Since then, we've climbed to 12 cents, meaning the price has now moved out of that primary load area. I've already made a small dollar cost averaging entry there for speculation. It offers a great risk-to-reward ratio, even though I'm fully aware that in terms of active daily usage, this blockchain isn't currently at its peak performance. If you are looking for an entry now, I wouldn't go chasing this 12-cent level. I'm being very specific with my strategy here. I would only enter a new position if there's a successful retest of the potential breakout of the trend line. Patience is what separates a professional from a gambler.
If you're playing this strictly as a trade, your stop loss is the red dashed line at 8 cents.
For short-term traders, a weekly candle close below 8 cents invalidates this entire setup. That's not my personal case for my long-term bags, but for a tactical trade, that's the exit. The first major hurdle for a true trend reversal is the 14-cent mark. This is my first take profit target. If ALGO can clear 14 cents and hold a weekly close above it, the price will effectively make a higher high. This is the moment the macro trend officially changes. Beyond 14 cents, the road to 20 cents, that 236 fib level, is the logical next step. My take profit targets are clearly defined by the green circles on the chart. 14 cents, 20, 30, 40, 60, and eventually 90 cents. I become a trader once these targets are hit by using a manual trailing stop. When we achieve the first target at 14 cents, the stop loss moves to the entry price. When the second target at 20 cents is achieved, the stop moves to target 1, and so on. We are locking in gains and protecting capital as the trend develops. The most compelling piece of evidence on this chart, however, is the Heikinashi Relative Strength Index at the bottom. We have just exited the most extreme oversold territory seen in the last 3 years. I have marked the chart with yellow arrows to highlight a clear bullish divergence. While the price made lower lows, the RSI began making higher lows. Historically, when the indicator has been this low, we've seen appreciations of 200%, 420%, and 111%. So, let's synthesize the fundamental and technical data. We have a project that has achieved a top-tier regulatory status as a commodity. It's technically superior in its quantum resistance and energy efficiency. It's being integrated into the back end of major global banks. My long-term trade remains valid because the fundamental thesis hasn't changed. I still hold a long-term profit bag from previous cycles that I won't sell even if we drop lower, but I keep that capped at 2% of my total portfolio max to manage risk. The best-case scenario for the coming weeks is that the trendline breakout is confirmed, leading to a rapid re-rating toward 14 cents and beyond as the market makes a higher high and targets those Fibonacci extension levels. The worst-case scenario is that the macro environment remains heavy and we fall back into the load zone. My thesis is built on probability, not certainty. If the weekly candle closes below 8 cents, the probability of further downside increases significantly. But as long as we hold above that level and confirm the trendline break, the weight of the evidence from the RSI divergence to the Fibonacci targets suggests that the next major move is to the upside. In my honest opinion, Algorand is a sleeping giant that has been fundamentally de-risked by the SEC. We have a clear technical setup with an extreme oversold signal that has historically led to triple-digit gains. We have a clear invalidation at 8 cents and a tiered take-profit strategy. If you value this level of analytical rigor and want to get away from the noise and the hype, then make sure you hit the like button and subscribe. It's the only way to ensure you don't miss my daily updates. For those of you who are ready to take your trading to the next level, I want to invite you into the Pro Capital Vault. This is our private community accessible through the YouTube Members Program. Inside the vault, you see my exact execution. You get real-time tracking of my entire portfolio, the precise buy and sell zones as I place them, strategic weekly live call, and much more. If you want to move from being a retail spectator to a position trader, click the Join button below this video, scan the QR code, or use the link in the pinned comment. Once you've joined, just remember to sync your YouTube account to our Discord server to automatically unlock all the private channels. I also highly recommend you go back and watch my last 2 videos on Algorand. Each video is a continuation of the last, and they provide the full context of how we've handled the load zone. I'll leave you with this. The market is designed to transfer wealth from the impatient to the patient. We have the data, we have the levels, and we have the strategy. Now, we simply let the chart decide. Much love for watching till the end, manage your risk, and I'll see you tomorrow in the next update. Remember, this is not financial advice. This is market intelligence. Be safe out there.